let's shift gears and get into a corporate conversation. We have Mr. Rakesh Rawal, the CEO at Anand Rathi Wealth Limited, joining us on the show on the back of very good Q3 numbers. Thank you so much for your time today, Mr. Rawal. And let's begin by understanding where your AUM is right now. The assets under management have crossed 99,000 crore rupees. Is market performance doing more of the heavy lifting than client acquisition? And how do you see this mix evolving going ahead? Because this is very close to your 1 lakh crore AUM guidance.
Well, if you look at the growth of AUM has been about 20,000 crores this year. 50% has come from market and 50% has come from new money. Yeah. So I think that going forward too, there will be a healthy mix of the two. So we are focused on getting new monies, which we are getting, and market will do its job.
All right, Mr. Rawal, you have repeatedly stated that 30% profit margin is a floor. Now, in a reinvestment phase, which cost would be the most willing to flex without hurting the franchisee strength?
30% we've been able to achieve, and there has been some operating leverage which has come into being. Our turnover is increased by 21%. So there are efficiencies in costs which are always there. Yeah. So as long as you're pursuing efficiency, which means that you are able to do the same thing with slightly more efficient costs, there will be some scope of operating working out to increase your at a pace higher than your turnover. There's no specific A or B line. It is all through in the various costs that we incur. And we'll keep looking for efficiencies to improve margins.
Okay, and Mr. Rawal, let's talk about a mutual fund distribution. The revenue has grown 21% on a year-on-year basis, while equity mutual fund net inflows grew only 4%. Does this signal increasing client caution, and how are you repositioning your product mix?
No, we're not. Firstly, we're not repositioning the product mix. The product mix is decided on the basis of a client objective that we pursue. The client objective that we pursue is close to about 14-15% return at 0.665 beta, giving a Jensen's alpha of about 5 to 6%. So to achieve this, there is a certain product mix that we are using. That is not changing unless and until the objective changes. And as far as mutual fund revenues are concerned, there is a linkage with the movement of the market. And if the market does well, then there are, the value goes up and you get a larger revenue. So that's on the one side. On the other side, we have a clear focus in getting new monies, right? The new monies will come in different forms. And over a period of time, as the client aligns to strategy, those forms will get translated into mutual funds and structured products.
And Mr. Rawal, we see that you have actually achieved your AUM close to the full year guidance in Q3 itself. So what should we pencil in when it comes to your Q4 numbers? What growth guidance should we work with respect to Q4 as well as the next financial year, that is FY27?
Well, we would like to stay with the numbers. I agree that we had given 1 lakh crore as the AUM for the end of the year, and we were already at 99,000. We are, I think, collecting net flows in the range of 1,000 plus per month. However, markets are a little uncertain. And therefore, at this point in time, we'll retain that 1 lakh crore guidance. Another quarter, and we'll give you fresh guidance for the next year. As far as revenue and profit are concerned, we'll retain the guidance. Though, of course, for the 3 quarters, we've done better than the proportionate values. Um, we are confident that there's a very high probability that we'll deliver the guidance that we have given. And this is the last quarter, and after that, the next year comes in, at which point in time we'll give you fresh guidance for the next year.
Okay, and Mr. Rawal, return on equity stands at an impressive 47%. How much of this is structural versus cyclical, if you could throw some light there? And where do you see normalized ROE settling, let's say, over the next 3 to 5 years?
As we've always said that we are a cash generating business, right? And we've been getting very healthy ROE numbers right from the beginning. Yeah. So it's how much of money you retain back and what kind of dividends you keep giving. So far, our policy has been close to about 30% or so we give out as dividends. So I think with that kind of policy plus reasonably healthy growth in profits year on year, we should retain a very healthy ROE.
All right, we look forward to that. But with this, Mr. Rawal, we let you go. So good having you on the channel today. Thank you so much for your time. All right, so that was the management of Anand Rathi Wealth talking to us about the growth guidance going ahead and what all really shaped up in the quarter gone by. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back on the other side.